Samuel, let's take a look at Cooperative Bank's first half results coming through. Pre-tax profit up 43% there to 4.15 billion shillings. Total assets up 23% to 164.8 billion shillings. Loan book up 36%. A solid set of results here. What did you take out of the numbers?
Thank you very much, Samantha. Very good performance there by Cooperative Bank. Notably, the share price has not been faring very well on the market because, I guess, of concerns over their capital structure and their asset base. But definitely, what came out through today has arrested a lot of those concerns, and basically going forward, hopefully, is going to be able to still sustain the performance.
Where's the growth expected to come from going forward?
Well, going forward, they're still very keen on growing their numbers. Their customer base grew to 2.2 million, and hopefully they'll still continue growing that. They seem to enjoy a lot of the support from the cooperative movement in Kenya, and because of that, especially expansion even to the region, they're planning to open a branch in Southern Sudan, and that definitely is going to still help them to grow. But looking at it in terms of the operating environment, the concerns as at now would be what we are seeing in terms of the inflation levels as well as the performance. So it might be more of being cautiously optimistic in terms of the expansion because of what we are experiencing at the moment.
You talk about being cautiously optimistic in terms of expansion, but the bank is bidding for 632 Lloyds banks, Lloyds Bank being ordered to dispose of these due to EU regulations following the financial crisis. Now, it is in the line bidding against Virgin Money and NBNK. But this will be a significant game changer for Co-op Bank. It will take its 350 branches currently, adding the 632 branches, almost 1,000 branches by the end of the year if the deal does go through. What does this mean for the bank? Have they made any note of this acquisition?
Well, they have not yet come out boldly with those numbers and those acquisitions, but definitely looking at it in terms of positioning themselves to be able to take advantage of whichever other opportunities there could be, both on the local front as well as the regional front, would position them very well. In terms of their expansion, especially just like you noted, they're trying to be able to still take advantage of any support network they can be able to use to be able to increase their service delivery as well as try to boost their ICT platform. That's one of the things that they mentioned they're working towards, and especially increasing accessibility to money, especially to some of their clients. They also mentioned something about mobile banking, which is definitely the kind of platform that they're trying to look at. But looking at it in terms of the expansion approach, definitely that would be one way as opposed to going all out, opening new branches and the cost that comes along with that.
Digital really seems to be the new frontier for growth for many companies in Kenya. We saw Nation Media Group reporting that their digital division recorded growth of 779%. Of course, this division is still in its infancy stage, but just looking at the overall company numbers, profit after tax rising 25% to 747 million shillings, revenue up 15.2% to 5.1 billion shillings. Advertising revenues across the company's divisions appear to be good. What are your thoughts on the company's results?
Well, listening to Mr. Gitahi yesterday, the managing director, well, the talk about Nation Media Group is very good and very positive, and especially noting that they were able to hit 1 billion mark in terms of their profitability. That was something that they're very happy about. We're looking at it in terms of the digital division. That's one of the things that they're trying to take advantage of, especially in terms of going forward, and also trying to position themselves to be able to take advantage of the regional expansion as well as integration that we're already seeing. Their product offering is very good, and they're very well positioned to be able to take advantage of the opportunities that are rising in the market. But looking at it in terms of their earnings, well, advertising revenue went up, which is good, and also hopefully they're going to be able to be more cautiously optimistic, especially in terms of expansion, because going forward they are concerned about issues to do with the foreign exchange fluctuations because they import a lot of their materials for production, and because of that puts them in a bit of a challenging environment. But hopefully going forward they're going to be able to still sustain the performance, and the dividend payout is another big plus, especially for shareholders, and hopefully the share price is going to be sustained.
Interesting, you note the regional expansion being a buffer for the company in light of the current economic environment and operating environment in Kenya. This is not unsimilar to many Kenyan companies that have been expanding into the region as they see more growth opportunities in the East African region.
Well, looking at it in terms of that, basically one of the things that Gitahi mentioned, especially about Tanzania, is that some of the, like for instance, they have a newspaper there that actually is expanding into Kenya in terms of selling some of their product, and their unique market niche is also positioning them very well to be able to take advantage in terms of some of the offerings that they do have. Looking at it in terms of their media division also, they're trying to see whether they can be able to still come up with very, very good innovative products that are going to still sustain them, especially in terms of performance, but definitely trying to diversify as well as to think about other markets is a good way to look at it in terms of the challenging environment that they're already in.
Let's move back to the banking sector. Barclays pre-tax profit out at a 13% rise, 5.3 billion shillings. They declared a dividend of 2 cents. Is this enough? They're usually a strong dividend payer. Is this what you were expecting as an investor?
Well, definitely that's a concern, because that's one of the best dividend. Barclays is one of the best dividend payers companies in Kenya. But looking at it in terms of the operating environment, especially looking at it in terms of how they performed last year, the dividend payout was very good and very, very positive. I guess it was hard for them to be able to still sustain those numbers. And looking at it in terms of their restructuring program, maybe that could be one of the things that has eaten into their bottom line. But going forward, you're hoping that they're going to be able to still sustain their strategy in terms of controlling their expansion, as well as taking advantage of the opportunities that could still be arising in the market. Mobile banking would be some of the things that they should also be thinking about, so that they can be able to still sustain their dividend policy, which has been very good over the recent past.
Given the persistent bear market that the Kenyan bourse finds itself in, what is your investment strategy at the moment?
Well, looking at it in terms of the market, just like you have been noting, we have been seeing the market going down ever since January, and right now we are seeing a lot of IPOs also stealing the show. There's British American Insurance going on, Bank of Kigali, which closed last week, and because of that, there's a lot of competition for the money. Also looking at it in terms of the interest regime, we are seeing the interest rates have been going up, especially from the treasury bills and instruments, and because of that, there's a lot of competition for the money and flight to quality. As at now, we are heading into some more challenging headwinds, especially looking at it in terms of the political situation, looking at it in terms of the foreign exchange situation, even the current drought situation that we are facing in the country. And because of that, I'm trying to be a bit more cautious and very balanced in terms of the approach.
Which stocks are safe bets?
Well, looking at it right now, we will be more cautiously comfortable with some of the banking stocks, because you're seeing them being able to still sustain their profitability, and some of the good dividend payers. Nation Media Group is still a good company, as well as other media stocks.